I think we're in a very good place in the hotel business. Occ and rate are strong, ADR is strong, growth is going to be good, capital markets are solid. I think it's a great time to be in. It's the Goldilocks theory. This is just right, I think, at this stage of the game. Hopefully it'll last for several years.
What's been really struck me as of late is just how robust the industry is. We had this incredible recovery following 2009, and it's continued, and now occupancies are reaching their peak, and so average rates are being aggressively pushed by operators, and they're getting higher rates. And what's that doing is that provides, with the operating leverage of hotels, they're becoming much more profitable, and what that means is they're becoming much more valuable. And then we also have historically low interest rates right now, and leverage is increasing for hotel transactions. So you put that all together, and we're seeing incredible value gains really across the board. There are very few markets where I can say that we have not been seeing robust performance. Even the resort markets that had lagged are coming back. So it's really quite an exciting time. And of course the question is well, how far can you go?
Yeah, so the numbers are so good for the hotel industry. The RevPAR growth continues. I mean, if you look at the 2013 year-end RevPAR growth was over 5%. Last 3 months, it was over 6%. Last 30 days, it was over 7%. So it's a very attractive environment. It's attracted a lot of capital. Lenders in particular have become much more aggressive. Hotels are becoming less of the red-haired stepchild of the real estate industry. They're focused on hospitality as one of the major 5 or 6 food groups. And I think that liquidity is one of the main driving forces for change in the industry. Lenders have had kind of severe competition for loans in the major gateway markets, so they've moved out into secondary and tertiary markets, and transactions have followed. So I think we're seeing a much broader level of liquidity in the hotel space this year than we saw last year, and certainly the year before.
There is in the full service space, we're seeing some new build opportunities in the U.S., which is really exciting. It's sort of been fits and starts and some voids, but over the past year and a half, we've seen a lot more activity with governments and pushing their money out to get some hotels opened and built. So we're excited about that. Globally, we're seeing a lot of interest in major U.S. brands that have got that local awareness and attention and recognition, and which is exciting not only for Hilton, but it's great for our competitors as well. I'd like to see Marriott succeed. I'd like to see Starwood succeed, because rising tide rises all ships. So it's really positive out there, and it's nice to see money actually engaging development and making deals happen.
Well, I think it's you could say it's the perfect storm of transactions. You have buyers and sellers in equilibrium, and you have readily available debt, which is the lubricant for all transactions.
The financing market, first of all, for the smaller stuff, that market's kind of wide open, pretty much a commodity. We've found up to 65% financing for those things, and then all of our stuff is kind of urban TEA type things, so we can go up to 35% mezz stack, right? Which really makes things kind of hum right along. Equity, another matter. So equity, it's kind of like the three bears. The bed's either too hard or too soft. It's rarely just right. But we're always in the market for small equity and large equity. On larger transactions only get done in the context of some kind of incentive, and usually a big incentive, and so there's a big public aspect to it, typically an EB5 aspect and stuff, and I think the financing there is much harder.
It's a fun time because things are really striking on all chords right now. You've got opportunities for both sales and for buyers and sellers. Private equity that's looking at other industries, but are really now focusing in on the hotel business because it's seen as a less volatile industry than it used to be thought of, and maybe better even than office and retail. It's the fundamentals that are so strong that's driving the investment, and the realization from a lot of groups that were previously either burned or concerned about the hotel business that it's actually a very stable and strong market to be in. So that's really what's changing and what's being seen as an opportunity now.
Europe is on a great road to recovery, actually. Our business is really starting to pick up out there. Transactions are starting to happen. More debt is becoming available out there, so it's starting to look a lot healthier. Well, they're slowing down, but everything's all relative, right? So they're still growing, I believe it's like 8.5%. Their GDP is growing at 8.5% annually, which is still quite strong. And so we still see a lot of opportunity out there. It's typically in the less sexier environments, like the major cities, the five-star hotels in the major cities, the trophy properties have been relatively built out and penetrated. There's really not much more room for new supply there to be economically feasible. So you're starting to look at the third and fourth tier cities in the mid-scale segment where there's a real opportunity in that part of the country.
Well, I think there are a lot of opportunities, but I'm a little worried after 30 months. So I think we have this period of time where we've got to get things done and stabilize, because I really don't know what's going to happen after 2016. I just don't have a warm and fuzzy about 2017 and beyond yet.
Things are moving in a really great direction. People are busy. Deals are getting done. They're just not talking about it, but they're actually doing it. I mean, that's what I see.